The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Monday, the 6th of February. We're looking at the beginning of the week with the Dow down 180 at 33,746. We're anticipating, I spoke about this on Friday, that we're anticipating some kind of a pullback, having failed to take out the high that was made at 34,342. That's the high of January. We just missed it, and we're kind of arching over, taking a breather. That's what I said to subscribers to my opening call. We're looking at the S&P, same sort of thing, really strong move. Yes, it's got this G/C, which says there's a possibility, like gold, we're going to have that sudden spike to a D and then have a deeper pullback. But I think we're in a consolidation phase right now. Had a fabulous couple of weeks. And look, the S&P finally went out of the Chapman Wave inside track. This is the first time since the high that was made in January at 4818.62 that you can see we've gone leg D in the weekly chart, but this is the first time for 2 weeks we've been above this inside track repellent zone. This is a technique that I developed a long time ago. So that says that the whole area of 4,020 to 4,000 should be very strong support in the S&P based on this weekly chart. And it's really starting to help the monthly chart, but we've barely begun the month of February. So let's wait on that. Looking at the QQQ, this is the NDX trading vehicle. Here we go. This is the Investor QQQ Trust Series, down 94 cents at 305.26. So that's down 0.31, and the Dow is down 0.46%. And the S&P is down 0.48%. Interesting, a little bit of a beat here on the QQQs. So what we're looking at here is the same as the S&P leg, then goes to a peak G/C at 313.38. There's an alternate count. Why? Because the technicals are just so strong. There's just enough room to have another pop. And I think this is a consolidation week, even if we make a slightly higher high. But the support level so far seems to be very good. In this case, we're at 305, and I would say 301 to 299 should be very strong support for the Qs. Looking at the IWM, that's the Russell 2000 small caps. It's the same thing. Yeah, we're on a leg. E goes to a peak E on Friday because there's a lower high. We're down $1.54, 195.45. Look at this monthly. There was a left side, right side price time match. Let me just move this away here. That takes you to next week, with a test of the high that was made the week of the 19th of August. Remember, that's when we were going short in the Dow for the subscribers to the opening call. And we saw a sharp pullback there. This is the IWM weekly chart at on the week of the 19th of August, goes to 201.99, then has a little tumble down to 162.50. But look at this. There's a left side, right side price time match, not to the low, but to the midpoint of the arch. I like to do that. And that says that within 2 weeks, we should try to test, it doesn't say you're going to, but it should try to test the 201 area. Okay, we're at 195 at this particular point. And this is going to be very interesting. Look at the SMHs. SMH made a peak D in the Chapman Wave based on, now this is going to be very interesting. I've got this in a few charts, and I'll talk about that. If this is not leg C, but it's really a D with an alternate count to the Chapman Wave, right there. Now you've got a Chapman Wave instant restart within 3 bars. It's actually within 2 bars, going to a leg D. But then D fell below the start, below the trough of the bar that made leg D. And that says if this is correct, this is really a D at this particular point, we could see a pullback in the semiconductors all the way to the 223 level. We're at 248 right now. That would be a major smash to the downside after such a big move. I would just say it's a breather if you're looking at the weekly and the daily charts, but in percentage terms, that's a pretty sharp pullback. But if this is an alternate count, it's still actually a C and going to a D. And the reason why I say alternate count is that, look, the price is above the 9-period moving average. That's in the daily chart on the left. The 9 is above the 14. Very nicely, that's 238 is support, 243 is 9, 238 is 14 support. MACD is good. Stochastics at 88%, very nice. On balance, one is pulling back after being a bit overbought. All I can say is that the technicals here are still very good. However, just in terms of the speed with which we had 1, 2, 3, 4, 5 weeks, 5 weeks, this is the 6th week of this rally in the SMHs that's just gone straight up with big green candles. I would anticipate some kind of a digestive phase, right? Just a digestive phase. We're looking at, I want to go to gold. Now, gold, this is going to be very interesting. Look, gold is down sharply from the high. This is the continuous contract. I never like to put that in because it gets smoothed out. Then I got the price, the wrong price. But anyway, I'll use that for now because that's what we've got. The continuous contract high was 1975.2 on the 2nd of February. Remember, we had gone, for subscribers, we had gone short gold 2 days before. Got stopped out, and then gold smashed to the downside Friday. And now it's holding support at the 50-period moving average. Is trading at 1884, up 7. And my eye says that you've got the S turning, the 9 is just about to go under the 14. That says for the first time, I would just say, look, this is unbelievable. For the first time since it crossed positive on the 8th of November, what a technique. That 9-period moving average went above the 14-period moving average at about, let me give you the price. The low was 1698, the high was 1751. Let's go from 1751. And look at this. It goes 1751 until today at 1883. That's not using Chapman wave techniques of peak D and all that sort of thing to be able to get it. I'm just using just this one technique. Therefore, you can't use one technique. You've got to use others to really benefit. But isn't this interesting that it was positive all the way through? And the weekly chart is still not even close to negative. It's still very positive. That's the reason why I was saying to subscribers, I think that gold is in a consolidation. I don't think this is it for gold. I think gold is in play. This big money, you can see by the kind of volume we saw in the rise, big money. This I'm talking about countries and huge funds were going into gold. That's the way I see it. Therefore, there is buying, selling coming in, and then we'll see with the support. The worst case right now that I can see is 1832, the 200-period moving average. That is a big pullback, $50 in gold, but of course it did that in a couple of days, for 2 days in a row. But let's just see what happens here. And to go with this, look at silver. Silver took out that blue horizontal line that I said was the midpoint of the rectangle, and if it takes it out again after making a peak F in the daily chart, that's a problem because it should not only test the low of the horizontal base for that long, this is narrow, long rectangle, but it should take it out. Well, lo and behold, it did. So silver's trading at 2236. 2216 is the 200-period exponential moving average. This is a leg D to the downside, so silver could have a little bit of a bounce here. But this weekly chart is not anywhere as clear and as good as the gold has been so far. So you remember, what did I say? Gold and silver were kind of okay. All of a sudden, silver took off and started leading the pack. After a little while, gold says, wait, what about me? I'm supposed to lead. Then gold starts to charge higher as silver takes a breather. And then as gold really makes a new recovery high, invariably what you see is, whoosh, they both come down. So we'll see if they're going to digest these gains. Let me just go to the dollar as we're about to leave this segment to go to the next one. Yep, the dollar is still up 29 ticks at 103.41. Strong leg A, gray leg A.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Back, I had a number of questions, but let me just get to this. I'm going to work backwards because that's what I can see in my folder right now. IBKR, the statement was, Basil, IBKR, if you get a chance, went long Friday. Yes. Okay, so we're looking at IBKR, which is Interactive Brokers. Now, I talk about the brokers. We're along the brokers, the IAI, away from 24th of March 2020. It's still long, and I still want my subscribers to be able to get into these brokerage houses because I think, from what I see, I'm looking at the public. I think the public is way in. I think they're in. They are trading now, especially those who are in crypto. Now they realize they've got to learn to take profits. You've got to take your money when you can. And now I think there's a different kettle of fish, a different player in the market. So I love this. I would say that was a little aggressive to be able to go long on Friday when I do like it as a sector. I like it as a stock. I like it in every way. It's at 84.86 on a day like this. It's up 68 cents with a general market. That's a good sign. But I do have it in leg D. It did a left side, right side price time match, a little bit, complex. But basically, from the highs that were made, from that high that was made on the 2nd of November of 81.35, it goes down twice. It tested the 200-period moving average. And then around about mid-December starts up again, had a big spike to a leg C, which was over that left side high. It went to 83.40, and that was mid-January. Then it pulls back, and it's walking the 9-period moving average, and 14-period moving average is the key support. Very nice. I don't know what your stop would be. In this particular instance, because I think the market is just a little shaky right now, and just to show you that, I wanted to quickly show you this because I said I would do it, but I won't be able to do much of it. I had a little X put in there when we made that top at 9:30 for a left side, right side price. This is price symmetry. We had number of bars to the upside equal the number of bars to the downside. It did it perfectly. Then it ran up again. And then I was doing my show. I wasn't able to do it. But from that low, I had a left side, right side price symmetry, which went right to the low that was made, undercut it at 41.15. Now we're at 41.13.75. This is the E-mini 1-minute chart breaking down. This I'm anticipating. It made a peak D in the 10-minute chart. I think we're in a digestive phase, and that we've done all the upside action, most of the upside action for the day, and now we'd have to see what happens for the rest of the day. So within that context, the fact that IBKR is running nicely like this, is still up 65 cents. It had a high today of 84.88. I don't know why that's 85.60. Sorry, I don't know what that A is. I don't like that. I must have messed up something or other. Anyway, yeah, I think it's going to pull back. So if this is a starter position, that's great. If this is your core position at an all-time high, I'm just saying I think it's going to go higher, but you've got to be prepared for some digestive action. So within that context, let me tell you what I am looking at within the context of IBKR. Look at the IAI. This is the, here we are. See, also making a new recovery high, not an all-time high of 116.25 from November of 2021. It did pull back to the 80 level, and now it's trading at 103. 20 points is already. It's a very nice rally, and I've got this as an F/B. So I think you're in. This is just my perspective, and it's I don't read anyone so far that has this perspective, so I could be right off the wall. But I think we're looking at a rotation that says as we're moving higher, things that have gone, stocks and ETFs that have gone really well, could rotate in a sideways move to digest the gains, while some of the laggards move a little higher. But I also think that even the laggards on the short term are going to suffer in the next, today into maybe Wednesday, Thursday, in this week. So I'm just saying to you, for your IBKR, I would, because, I don't know whether you haven't told me yet, but because it is at a high, an all-time high, I'm just going to say I can see about a 7-point range, maybe another point or so higher, but maybe 82 to 80 as a key support, could even go to 78 just in this interim period. But then I see it going higher. I haven't done anything with the weekly chart. Let me just do this right now. I'll do it live so that you can see what I do. So this is the low. Oops. No, that was the low right there where I said A. So this low was 56.38, and this is 56.43. Right, that's what I said. This should have been the low right there. And then we get, that's peak A, another A right here. I'm going to go through this in a moment because I've got a couple of charts I want to show you just as demonstrations of the Chapman wave technique. Remember I said I'm going to spend a lot more time on that over the coming months, because I think so many people are now saying, hey, we're doing this stuff, but sometimes we just aren't sure. Can you just go through it with us? So I'm going to call this a peak D. I'm going to call this a new buy signal to a buy mode. I might be wrong. This could be an alternate count, F/G. But everything so far is very good. I'm not going to get carried away. I don't want to anticipate something that isn't there. So I am saying to you, I like it. If it was your first position, in other words, if you were going to add to it a little later on, I'd say great. Stocks that make new all-time highs tend to continue doing that until there's a complete change of tide. There isn't a change of tide yet. I think you're right. But my thinking right now is be prepared that you could have a 5 to 7% pullback. If that's okay with you, because I think then we go higher, that's fine. I don't need to put that arrow in upside down. This arrow should be up and not down since it's the bottom. And there's your cup formation. It's almost like, and I don't want to get too carried away, like a Chapman wave cup and ladle breakout pattern. So what is the cup and ladle? All right, so let me just go to a couple of things. No, I haven't finished. Let me just do this overview. The crude oil, we've been looking at it negatively. Where did I type that? There it is. Crude oil trading down 47 cents at 72.92. Look at this beautiful arch formation right here, going back to the starting point, close to taking it out. Look at that. I love this Chapman wave inside track repellent zone. Look at this. It goes once, gets hit second time, gets hit a third time in that track, boom, turns down, comes lower. Now, I would have taken a midpoint right here because it would have been too steep otherwise, from this low to the doji candle right there, and then I would have typed in the right side, same price movement, number of bars, and that says right there, look, it came in a day early. No, it hasn't taken it out. Maybe I'm wrong. The low on crude oil continuous contract is 72.73. and today's low 72.82. It hasn't taken it out yet. So let me just move this down. It really irritates me. I'm a very visual person, so I need to take that to the low right there. So I heard Larry just the other day say, I don't think anybody's ever charted as many charts as I have. Larry, I disagree with you. I've, on any chart that you can see, and not only that, remember on TradeStation, because it doesn't save everything you do. I wish it did that. I've lost, maybe over the last 20 years, I've had to redo many of my charts, daily, weekly, monthly, 120-minute charts over and over again. It's there somewhere, but on another file. It'll pop up later on, with the missing notation. I'd worked out about 4 or 5 years ago. I said, I must have done at least 250,000 charts. Even the daily, look, I've just done all daily and the 1 minute and the 10 minute and the e-minis. So the competition is there. We're down 168, 108.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
I had a question about BIPC, Brookfield Infrastructure. Peter, didn't you do a Brookfield? Was that the REIT that we did, Brookfield? I was just saying, is this another one that I lost all the notation for? I used to do it all the time. Anyway, this is Brookfield Infrastructure, something or other. It made a peak E at 46, and this is peak D we're talking about. Hi, peak D. Welcome back. So we're looking at the daily chart, pulling back, making the dreaded H, making a low today at minus 99 at 42.58. What's the question? Does it go over BIPC when you have a chance? Wondering if I should sell some of this. Thanks. Ooh, that's a tough one. I would have immediately said, yes, I think so, based on the weekly, the arch formation in the weekly, the arch formation in the monthly chart. But I am going to say to you, I don't know where you got in, because if you got in much lower, I don't want you getting out of something with capital gain and all that stuff, when in fact, the way I'm looking at it, I think it could go a little lower in the intermediate term. It could even go down to it's at 42.57. Could even, if it takes out 41, I can see it testing the 38 low that was made back in January. But on a bigger scale, I can see that the MACD is just starting in the weekly chart to improve. I need price with it. It's just the MACD. But the monthly chart is about to start helping itself by having the histogram starting to improve. And this is really important. Wow. So to take, you know what I'm going to suggest? Because you've asked the question, just take a little bit off, and that little bit, plan that will probably go back, maybe a little lower down. And let's look at it. I want to see how it holds by Wednesday. If Wednesday it's testing 41 or it's lower, that's one thing. But if all of a sudden that 200 period moving average becomes a magnet gain of 44.09, and it's able just to try to get there, it's saying to me, and as an info, and I don't know what Brookfield, I left out an I guess, Brookfield, it looked like Field. There it is. Yeah, just let's leave it for another day, and Field with no E at the end. I'm going to say to you, take a tad off right now, because I think it's a little vulnerable, as we can see. So take something off. I wouldn't get out of the whole position. Let's look at it again in 2 days, only because it's in an area that should be doing better, but it isn't. And therefore, maybe it's a weak link within that whole sector. And I'm not sure. I need to also check to see exactly what they did. Next question came in. Let's see. Yes, good to have you back. Den of Insomniacs. Yeah, right. A lot of people in the den spend a lot of hours at this. And fruitfully, I like that. For me, never sleep, just a nap or two. Yeah, everybody's got their own way of dealing with sleep, I know. Long yes against the low of the day. I just be real careful going long right at this particular point. I know that I was correct earlier on in getting the short side, and then just as we came on the air, I went short again at about 41, I think it was 25, and I had a 27 stop, or 23, and I had a 25 stop. I had a very tight stop. Got stopped out, and here we are down to the 41.06 area. So it's just making lower lows. I think all the buying has been done for the day, maybe even for the next 2 days. So that's the way I'm looking at it. So I just thought I'd mention that. I don't want to spend time on this today because there's just so much to do. I had a lot of other questions, so I'm going to try to deal with them right now. Let me just see. So a question came in about the, here we go, FXI. A lot of people over the last, because I've been talking about the FXI for some time, that it had made a low, and that I think that China was in fact turning the corner. Now I think it's in that overbought situation on a shorter term. FXI is down. This is the iShares China Large Cap ETF. It's down 82 cents at 30.27, just about to hit the 200 period moving average of 30. So it's already gone from, I mean, this is fabulous. It goes from the 20, was that 22 or 23 or something, screams up to 33s, and now it's at 30. This is fabulous action. But it's just the start of 2023. It's the start of a whole economic structure for China that dealt with COVID, dealt with a whole bunch of things. And it seems to me that a major part of this initial move is done, and now it needs quite a bit of time. A whole bunch, look at this, Baba, all of those stocks that we had. GT used to send me emails saying going long, and I thought crazy. And then all of a sudden the market turned and said, yep, now you can go long. This should be a decent counter trend bounce. Now I'm saying now the bounce has used up a tremendous amount of its energy, and it just needs time. Look, the weekly chart's still fabulous. Everything's good. Baba is trading down 242 at 103.92, but it ran to 120. Ran from 120 from the 50s. That is fantastic. Now it needs a breather. Oh, and a lot of stocks, a lot of equities, a lot of ETFs need a breather. Next question. Let me do this. So this is Simon Properties, SPG. I think it has earnings this week sometime. The reason why I wanted to bring it up is just driving around, not necessarily going into malls, but going to different places and going past malls and just looking across the highway to see how the parking is unbelievable. I mean, Simon Properties had a fabulous move from the low in March of 2020, around about the 40s, spirals up to the 170s, pulls back to the 80s, and is now trading at 128. Here again, fabulous action. And this is what I've been saying. How long have I been talking about this? I've been saying that if you look at the charts, I don't know what people are talking about when they're talking about a crash. I mean, we heard crash. If you had a Google crash, it would be, I would love to do that. I had a thing that years ago that I used to be able to Google a word, and then I'd also be able to chart the word. I lost that ability. I need to find out if I can do that again, because I get peaked D, E, and F in the word, and crash, I think up to 3 weeks ago, the word crash was just up to 2 weeks ago. And now it's a little different. Now everybody's getting a little sanguine, and now I think we're a little bit vulnerable. And that you can see in the Simon Properties Group malts. I think it's a little bit toppy, fabulous move off the low. And this is just saying, look, I guess I have to do this. I did this for subscribers over the weekend. I'll do this now. I think I did it last week, but I'll do it again. Look at this. This is the chart with the 30-year, 10-year, 20-year, 30-year, 10-year, and 5-year T-bond yields, T-note and T-bond yields on the left. On the right, in the upper right, is the Wood iShares Global Timber and Forestry ETF, and the weekly chart, and the HGX Philadelphia Index at the bottom on the right. Isn't this amazing? Look how well. Well, first of all, remember I said Chapman. The cup and handle pattern is not my favorite. My favorite is the cup and ladle, the Chapman Wave cup and ladle, where it breaks out above the left side high, D, E, or F, and it breaks out in leg C because it says it should still go to a D. All right? So here we are. I think yields are just saying, I'm stuck in a range for this moment. I'm not going anywhere. I'm just in this range. But if you look at the Wood iShares Global and Timber Forestry ETF, way off the 200 period exponential moving average, hits the 9-period moving average. This is a fantastic rally when all the news said, oh my God, the real estate, bad. Actually, I think it is bad, but it's bad for this particular phase of the market in the sense that it's just digesting the gains that it made from the fantastic low. This is the Global Timber and Forestry ETF, from the fantastic low that was made both in the Philadelphia Housing Index and the Timber and Forestry ETF back in September of last year. But that's a fantastic rally under these bad conditions. So this is just saying, yes, it is bad, but not as bad as everybody's saying, especially if you look at the Philadelphia Housing Index. So I just wanted to show that chart. I'll be right back. Now it's down 188, 180. S&P's down 35. Basil, Chapman, Tiger Technicians Hour.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
A little bit of a bounce in the E-mini here, down 33. It's going to the rectangle formation. If it does start to go to 441.22, it's at 41.14 right now. At any time in the next hour, that'll be good action. As I say, there is buying. I'm considering this as a consolidation in the market right now after a fabulous couple of weeks. The question came in about PANW. PANW is. Oh, I went to the wrong thing. Now, where did I put that? There it is. Okay. PANW is Palo Alto Networks. Oh, I had it up all the time. So, no, you're absolutely correct. S&P in the den. I use this. I like to be ahead of the game. There are two or three facets of the Chapman wave where there are very strict rules that cannot be broken. But if they are broken, they're broken for a very specific reason, under under specific conditions, and only if it warrants it. I like to be ahead of the game. So Palo Alto made a low on the 12th of January at 132.22. It went to a strong peak A, pulls back, and the 9 period then crossed positive. The MACD was this is the Chapman wave squash formation, which says you can go very quickly to a peak A, B, C, and then have a bit of a breather, and then go to D as the torque of the stochastic hands you over to the MACD. Well, that's kind of what we did. So you see the high that was made at 152.16 on the 24th. The next day was 3 cents high at 152.19. So technically, this is B right here. But if you look at right there, you will see that the relative strength index, not the on-balance volume, I usually use the on-balance volume, but the relative index had a little bit of a blip. And that said to me that fractional new high, I want to be ahead of the game, remember? So I know, because it's red, I've said, look, that's the discretion was that I would take that as a peak, because we got to a peak C under the 200-period moving average. We went to a D over the 200-period moving average. That technically is a C. And now we've gone under the 200. It says to me we've got a little digester phase here. Very often a phantom peak is there, and it says if you were long, take it a little bit off. Don't take your whole thing. Just take it a little bit off and raise your stop and just wait to see, because everything here, the MACD, the stochastic, the 9 over the 14, the on-balance one, everything's positive. So I'm just being a little cautious. I shouldn't have done that without telling you, but I did make it red to say that's a phantom peak. You're correct in calling that a C. I'm trying to be ahead of the game because all the action says this could turn out to be D. But because of today's very small pullback of $1.60 so far, the day's young, it says, you know what, it's probably a C. So yes, absolutely. And I just wanted to be ahead of the game. That's all. It doesn't say to change your position. It says, you know what, take a little bit off and just don't change your whole core position. This is still a very good weekly chart. But even in the weekly chart, you can see we've been to peak A before and failed under the Chapman wave inside track repellent zone. So I'm just being a little careful here. But I do believe in the work that I did, and I showed subscribers over the weekend, when we looked at HACK, which is the ETF for the prime cybersecurity area, you can see that there is a start, and this kind of coincides. Look, there's your peak E, no phantom peaks, nothing. A peak E over the 200-period moving average, and now it's under it. It says they got a bit of a digestive phase, and this peak A, B, C, it's actually a peak, a leg D in the weekly chart. It just says, hey, be careful in the overall general market. I hope that helps you. Next question I had was, where did it go? SPG reports tonight. Oh, okay. SPG, so that's Simon Properties. I thought it was tomorrow. Anyway, yeah. My thinking right now is that Simon Properties, I suspect it's going to be either that the profits are there, because you can see over the last 3 months, there's been a rise in the price, but the outlook is still a little bit cautious. That either that or the outlook's is improving a lot, and the performance is not. It's going to be a mixed. I think it's going to be mixed. And my eye says that in Simon Properties SPG, if I had to go out maybe into the third or fourth week of February, that Simon Properties will be challenging this high that was made on the week of the 22nd of April of 134. So I'm looking out, and I think that unless there's just some real bad news and it closes, it's 128.04. It closes on a weekly basis under 119. The 14-period moving average is 120.91. I think it's still looking pretty good. Okay, that's just my opinion. All right. Next question I had. Let me see. So I wanted to do this. I'd written it down. A rogue wave. People had asked me for a little while now, what the heck is a rogue wave? A rogue wave is this. Look, here's a chart of Exxon. Exxon Enterprises, Inc. Trading AXON is a symbol. I got hooked over here with my earphone. It's trading at 198.51. And it's gone to a peak E. No phantom peaks, no nothing. A fabulous move to the upside. And why the heck did I put that in? Rogue Wave Exxon Daily. Huh? No, this is not right. Oh, it was the wrong thing. Oh, wrong. There's no phantom peak here. The phantom peak is, yeah, I'll find one. A phantom peak is like when you see the sign of the beach that says high tide at noon, and at 12:06 you go to the furthest rock. You say, good, tide's going out. I'm going to get my little blankie, and I'm going to get my suntan lotion, my dark glasses, and my whatever I want to eat, and sit down, my book to read, and splash out of the blue. You get soaked, and you're looking around, but the tide's going in. So what happened? Well, the tide didn't see the sign at 12 o'clock. The high tide was going to be at 12 o'clock, because at 12:03, whoosh, this one wave just came up the beach and did the splash, but the tide essentially was going out. So you're short, and out of the blue, the price spikes higher. Oh, gold. And out of the blue, this is a rogue wave. Look, this is what happened to us. We were the rogue wave. In fact, we were the participants. We got our sunglasses all wet, and we got soaked. I bought, this is the DZZ, which is 2 times short the gold. We did that on the right here, on this candle, right here. It's a terrible instrument to trade. It trades by appointment. You're lucky if you can get a fill. It's maybe 1,000 shares altogether or something some days. Maybe now it's a little more. So on the 31st of January, we go short because I said, hey, I think that's a peak G. You could have a little bit of a pop. I don't know if it'll go to a leg D, but it could. But we did, and we got stopped out, and lo and behold, so this is what happened. Right here, it was correct in thinking that you could go short. Everything said you could go short, but that rogue wave went splap, and it had that nominal new high, and it went high long enough for the shorts to say, oh, my God, oh, gee, I've got to cover, and for the longs to say, why on earth gold's the best sector that we've had? Why on earth would I want to sell? I'm going to buy back, and then that very bar plunges and goes to the low, and then it follows with a cascade. That's a rogue wave. So let me put down here so we have a really good example of Chapman wave. Whoa.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, let me just do this real quickly because I've still got some stuff to cover. So here's the E-mini 1 minute. It doesn't matter that it's a 1 minute chart. These are just charts, all right? Look at this. Comes down, looks very negative, pulls back, and then all of a sudden, look, all the technicals give you a very sharp move to the upside. Then it crosses positive, and it goes from that plumb line, the left side high. I always bump up against the Grand Canyon cliff on the left side. And I go to the midpoint and measure the bars to the right. And 2 bars earlier, what does it do? It goes above the high that was made at 10:14 this morning of 4125.50. The high so far is 4126.75. So isn't that interesting? Now, if it rallies again, then you've got until about just before 11 to get to the high that was made right here at PD at 1010, which was 4130.25. So isn't this interesting? Nice patterns that we look at all the time. So I wonder what to do. Of course, I don't know why I spent the weekend and then writing down all these things that I should get to. I wanted to show you different things. Look, yes, thank you, A2 in the den. Yes, Futu at 49.65 down 269. That's very close, exactly right there to a Chapman wave, rogue wave, except it was the bar after the high that was made that reversed sharply. But that's the kind of idea. Okay, so questions came in here. Yeah, so CMG, look, this is really interesting. CMG, leg D in the daily chart. Cup formation has a right side price time match of the high that was made on the 16th of September of 1754.56. And it says by next week, there should be at least an attempt to get there. This is a leg C right now. And look at the monthly chart. So this is a very interesting chart because it did the cup formation after the dreaded H, where it went below the left side low but closed higher, and then closed on a weekly basis, a weekly chart above that. So far, this is saying there could be a bit of a surprise to CMG if everything comes together, and it could test at 16.95 right now. It could test the 17.39. Have a wonderful rest of the day. Stay tuned for Steve Rhodes. Check out my opening call, my daily newsletter, and I will see you tomorrow. And thank you for being here.